You've described this moment as a metals war.
This is definitely historic times. Just the fact that globalism broke down during the last 5 years. So we're in a decade of major change. We now have entered a war where now people hoard, they don't trade, they may restrict. And so now the world is bifurcated. The battle is not just in metals, it's everything. We're in a situation where governments are now active participants in certain commodity markets. So we've had a hidden hand enter the arena to buy these assets. So there's always been a hidden hand of central bank buying of gold. Now we're seeing it in other asset classes such as silver. We're in a new paradigm. This is no longer a trade. This is a whole new shift where banks want to own more on their balance sheets, whether that's a private bank, you're watching them get in, central banks are buying, institutions are buying. I just had a publicly traded company and we're doing account paperwork right now and they're adding silver onto their treasury management, and it's a large amount. I've never seen anything like this.
You are seeing publicly listed companies adding physical silver to their balance sheet as a treasury asset.
We talked earlier about the battle for above ground metal. Now we're talking about battle for metal below ground. This is how a nation state can acquire an awful lot of natural resources without anyone really watching or understanding what's happening. The United States absolutely is locking down the entire Western Hemisphere, top to bottom. This is where World War III type scenarios could absolutely be formed.
This is The Real Story with Michelle Makori.
Hello, I'm Michelle Makori, and thank you for joining us here on The Real Story, where we go beyond the headlines, beneath the surface, and behind the curtain to show you what is really happening with money, markets, and power. And my guest today says that we have entered what he calls a metals war era. Not just higher prices, not just inflation hedging, but a structural shift where gold and silver are being treated as strategic sovereign assets tied to monetary power and national security. Josh Phair is the CEO of Scottsdale Mint. He sits inside the physical side of this market, minting for sovereigns, supplying major wholesalers, and watching metal move across jurisdictions in real time. He's also the co-founder and the CEO of the Wyoming Reserve, a physical gold vaulting and custody platform working with institutional partners around the world. Now, given his vantage point, if something is changing in the plumbing of the metal system, he would see it, and he would see it early. He doesn't just watch the charts, he watches the physical flows. He watches the players through the metals ecosystem at large. And today, he is sharing his insights with us. Josh, welcome to The Real Story here on MFM. Good to have you.
Great to be here. Thanks.
And Josh, you're joining us from the Mint. So a note to our viewers, all of that noise that they hear in the background, that's what?
That is manufacturing of a lot of different gold and silver products right now behind me. So I'm in a conference room on the manufacturing side. A lot of our executive offices are in construction right now. And normally this time of day, the shift is complete, but we are crazy busy. I would say January was a record month, the largest in my 18 plus year history of production. So this is definitely historic times.
Right. And we will get into those historic times. A lot to discuss, including what we were chatting about earlier, and that's the suspension of metals trading at the CME again. It's always curious, especially as silver was creeping up above $90, and then we had a halt in trading there. So we definitely want to discuss that. We're also going to discuss the chaos and turmoil in Mexico and what that could mean for the silver markets, given that Mexico is the world's largest producer of silver. But Josh, before we get into those topics, for our viewers that are not familiar with you and you're thinking, lay out your core macro thesis, because you've described this moment as a metals war. So what does that mean?
For me, it started during COVID lockdowns and just watching what governments were doing to the monetary supply, and then watching the Ukraine-Russia war break down and the seizure of assets. And at that moment, I actually made an internal prediction, and which is why I moved my company to the state of Wyoming and built out a whole new facility, including vaulting for banks, governments, institutions, and also just expanding the footprint of manufacturing. So I'm very blessed to now be in the situation where we're able to be an operator who can kind of step up to the plate and feed the industry. And really, it started with just the fact that globalism broke down during the last 5 years. So we're in a decade of major change, and we've seen it on the inflationary side, but we're also watching globalism completely break apart. And so, in a world where we used to trade, where it was the most economical, the cheapest, the best, and everyone traded quite friendly, we now have entered a war. I think we're all seeing that over the last year, where now people hoard, they don't trade, they may restrict, and so now the world is bifurcated. And so it's essentially, I've kind of been calling it the Axis versus Allies. And so the battle is not just in metals. It's everything. I think we've seen, Trump's first term, he correctly predicted that, hey, we can't have reliance on Taiwan. What happens if that goes down? All the computer chips are either made in China or Taiwan. And so he put in, $2 mega billion facilities that are close to be coming online out of the state of Arizona. But had he not done that years ago, we'd be in a very precarious situation. But we're seeing that in medical, healthcare. Most comes from China and India. And I think what's kind of come into the spotlight, what started with rare earth minerals really even started before that with gold. And, for those that were paying attention before Trump took office, he posted on X, he said, he warned the BRICS nations, do not create a competing currency and don't back it. And a lot of people didn't even talk about what does he mean by back it? And I can tell you what exactly was happening was there's a global arms race for gold. So, historically, whether you want to talk to the Michael Saylors or not, hey, go sell your gold. No, the biggest central banks in the world are accumulating gold, and you could say that those that do not want to be in the Western banking system absolutely are building gold up on their balance sheets. And so, I kind of talked about this. I didn't even have a social media account until January of 25, so just over a year ago. And I was getting back on an airplane. I had a hat on, for a long flight back from Europe to the States. And I had spent time with the armed transport companies. And I'm like, the amount of material moving is not being seen to the public. And I made a prediction at that time that you're going to see record imports of gold into the United States. And a lot of people said, no way. And then, of course, we saw that in February and March, where the United States, and still even to this day, a lot of people say that was just because of the tariff risk. And maybe not. But, we've never seen, precious metals, being, while we have concerns of potential tariff risk on anything, of course, the United States needs gold, it needs silver. So why would you want to tax something that you need to bring in? So I think we've watched that kind of start with gold in 25, and then suddenly silver was kind of left to the side. The ratio got up to about 110 to 1 between silver and gold. And suddenly silver becomes a critical mineral end of summer, August, and off we go. And, so yeah, we're in a situation where governments are now active participants in certain commodity markets. And we've now seen it. Just a few weeks ago, JD Vance came out, they call it the Vault Project. They're devoting $12 billion and they're putting in price floors. And then we're trying to figure out what does that price floor means. And for me, what it means is they're a buyer. They're a buyer every time it dips over a certain amount. So that's what's called mercantile banking. So in a situation where two countries don't trade together, often a bank will represent a sovereign entity, the government, and they're out there, they're buying and moving the material for them. So we've had a hidden hand enter the arena to buy these assets. So there's always been a hidden hand of central bank buying of gold. Now we're seeing it in other asset classes such as silver.
Okay, a lot to unpack there. In this era of resource nationalism, as you say, commodities are strategic sovereign assets. I want to get further into that. And of course, we on this show and on this channel have discussed the BRICS and their agenda of de-dollarizing after the excessive weaponization of the dollar and moving towards gold as a neutral reserve asset, and potentially even launching the BRICS unit backed by their own currencies and gold. But you've said something very interesting here, and that is the hidden hand of government. And you said that you started to get noticed on social media, started posting on social media when you saw inflows of gold coming into the United States. So what do you think was happening there?
Yeah. So, and even right now, the amount of material that's moving all over the world, we've never seen anything like this. And so, what normally, if I'm picking up material, whether it's New York, it's in Germany, it's in Switzerland, a lot of these vaults where we're picking up material to bring to the United States or to ship off to another customer, normally it's 24, 48 hours to schedule something. Now you're talking weeks. I mean, and I was just at a conference in Florida last week in a meeting with Brinks, a meeting with IBI and Loomis and a lot of these groups. They don't even have the logistic capability at times to move all the pallets of material. It's like Tetris to figure out what truck is coming for what load. And while that may sound ridiculous to some, this is large stuff. It's heavy. And it's the sheer volume of stuff that's coming in and out. I mean, I'm talking, there's a lot of flights that we fly out every week out of Europe, to come to the States. And we're seeing airlines that normally do high value, it's a 3x price. And they're now going to a bid system. So you have to bid for that high value freight to go on that plane. And if not, you get pushed out another day. And so we're absolutely in quite high pressure time. So I think pressure is the great term. The United States, I feel like, is pretty well set. There is a lot of material here, but Europe, which I just got back from Germany a few weeks ago as well, they're very much concerned about their supply of silver, in particular in Q3 of this calendar year. So it's all about metal flow from the refineries to the vaults, to the manufacturers. And really the exchanges are kind of at times the last resort. So oftentimes a mining company or refining company, when you're selling into an exchange, you're not getting the best price. You're just kind of getting the market rate minus some fees. Well, if you can sell that material to someone that's willing to bid a little bit higher, that metal never gets to the exchange. And that's really what we've been seeing all across the world. And I do believe that China has been an active buyer. India has been an active buyer, in particular in the silver market. And that's causing huge dislocation of liquidity of material that's available. A lot of companies are not willing. The traditional European model is they lease out their metal. But right now they're kind of concerned, I may not be able to get that back. And then if it's in the wrong jurisdiction, what happens is if someone puts a tariff, an export restriction like we've seen in China. So we just have an extreme pressure of material moving all over the place. Liquidity is very tight because of the volumes are up so high. The cost per ounce is high. Hedging strategies could be broken at some of these institutions and companies. So it's really quite wild to watch it take place, and it's impacting, I would say, like as I mentioned, just on certain flights, it's a 3x cost to move that material. That tells you that's demand. That is absolute demand, where the airlines are involved now in marking up just to handle the pressure.
And I just want to reframe this for our viewers, that you're able to have these insights because you are the founder and the CEO of a physical gold vaulting and custody platform. So you're actually moving this metal around for your clients. Is that correct?
That's right. So we work with banks, we work with some sovereigns, we work with hundreds of wholesalers around the world. We produce a lot of product that has other companies' names on it, for whether it's private banks or online dealers all over the world. And then a lot of that material is brought. So we do stuff for internationally, and we do vaulting and fulfillment services out of the U.S. for some of these foreign companies. And so I see kind of everything in there. And that's not to mean that I see it all, but I kind of touch a lot of different areas. So I see the pressure that's out there, or the inbound. I see it when it picks up and when it slows down, probably a little faster than maybe the norm. And this time last year, I was talking about a situation where governments are heavily involved, and the banks were heavily involved, but the retail was dead. And so retail has been pretty much quiet and out of the precious metal space in a big way, really since the Silicon Valley moment when that bank fell apart. And the retail sector was more of a net seller. And so we saw a lot of that net selling was actually going into the hands. It would go to the refineries and then would go to the banks and it would be poured into 1,000-ounce bars or kilo gold bars and delivered to the exchanges. So it was really going back into the hands of the institutions. Now we've seen, Michelle, since October, and especially since literally Christmas, week of Christmas, retail has awoken and they want metal. And so while there has still been a lot of selling, we're now seeing retail clamor for the metal. And now that's adding even more pressure to a system where now multiple parties are clamoring for those same ounces. And now that's causing retail delay, for what I would call retail ready product sizes. So if you're buying a 10-ounce silver bar or a 1-ounce gold bar, is that, how do you go in? So we have to do lab analysis. We have to melt it, weights, purities, hitting all these things. And so nothing gets produced in a moment's notice. So when that material comes in from a refinery, the noises that you might be hearing in my background, we have to process it, quality assurance, because we're guaranteeing, the weight and purity of everything. And then you got logistics. That material might be ready, and we can't get a truck because all the armed trucks at our facility are already booked up for the next 2 weeks. So everything's on a little bit of a delay mechanism.
Right. And again, just to clarify, you've got the Scottsdale Mint as well as the Wyoming Reserve. So you're wearing two hats, hence you're able to see the full spectrum of what's going on in the metals market right now. When we talk about this change in standing for delivery, that there's been an increase in standing for delivery and an increase in actual demand for the physical product, as opposed to how the market often trades, and that's just on the paper side of things, the derivatives, the paper markets. You've often talked about the difference between paper markets and physical markets, and there is some talk that this is coming to a head, that at some point this is going to crack wide open. What are you thinking there?
Well, I think the fact that the Comex just had another freeze, and that was, I guess, more than an hour. I'm still getting the information as to why it went down. I think that shows that the futures market is stressed, to put it lightly. I would say very stressed. I'd say the London market is under the most stress. So the Comex is really just an exchange of material moving in and getting bought out and moved out. And then obviously they're turning it. The paper is just trading a lot. London is a different dynamic where they're leasing and they're financing. And then so there could be counterparty risk, how many people own the same bar. We don't have that same kind of system in the US, but futures is not trading very well. I think we've watched silver, ramp really from Thanksgiving when the Comex closed the day after Thanksgiving, and they said it was a server problem.
Yeah, the
And then we
cooling
watched
system. There was a
literally
cooling system issue there, apparently.
a cooling issue. You know what? These are very high tech. I mean, these are big exchanges. And so to have that kind of failure when the redundancy that goes into these types of server rooms, it's surprising. So maybe it happens once. But I also know what happened that moment is silver just took off and didn't stop until, the end of January, where it got too hot, pulled back, dipped to the low 60s, and now we're right back close to 90 all over again. And then the Comex tomorrow is first delivery date, and now it froze up again. And we don't know why, but it went down for more than an hour, and so there was no trading. So I do think that does go to show that people that are trading, and the futures are a leverage product, and so that's not a physical product. So I do think, we kind of look at what the governments are doing. They're all saying, hey, I want my metal and I want it in my jurisdiction. And they want the physical thing. And now you have Basel III, which says if you own a paper product of gold, it's 75% risk-free on your balance sheet. But if you own the physical gold, it's 100% risk-free. So now you've got a lot of banks are also saying, hey, I want the physical product. I don't want this derivative. And so now I think this is just showing it's the slow breakdown. Whether or not this thing is going to completely blow open or not tomorrow, anything could always happen. But it just shows that the stress is definitely increasing, and more people want it. I mean, we've got the Chinese who 20 years ago did not really have a big middle class. 10 years ago, it was just growing. Now they want gold and they want silver. And so you've got now retail public going after physical things because they have distrust of God. I say the biggest thing right now is distrust of government, distrust of politicians. We don't trust, citizens don't trust their government. Governments don't trust each other. Do we even believe the economic data? Elon Musk exposed that there was 2 money centers within the U.S. government that's not recorded. Was that $1 billion or was that $1 trillion? And the fact is he didn't quite know. So there's a lot of concerns out there, and now people are going to trustless assets.
Right, and that's again a big theme that we've been talking about. I have to say it's very challenging to trust the CME when we have these suspensions in trading. And as we just touched on, there was an issue last year where they did blame the cooling system for that. It does raise questions, Josh. Speculation here, but what do you think happened today? I mean, silver was reaching over 90. Silver was climbing. I think it hit 91. And then all of a sudden, we had this trading halt. It wasn't just metals. It was also natural gas. But if you were to speculate, do you think that there are other powers at B that may be involved here? What's your thought?
And I would say based on the timing where tomorrow's first delivery, I would say it's concerning. Did someone put in a request that they're going to buy a lot? So actually, there was a request back around Thanksgiving, and someone was asking for a lot of metal. My take is that the bank convinced the customer to not take it from the Comex, but we'll help you get it from other markets. Because we watched silver just go, it just bid up, and I'm going to go with it was China. And my take is the Comex is so critical also to the trade and economy of the United States that they can't let this thing, they can't let it die. And so they're going to do everything they can to kick the can down the road, keep these things going. And look, oftentimes the market does work quite efficiently, but we're in a situation where, can you imagine a foreign government that's trying to that can literally print all the fiat currency they want to buy hard assets? You can disrupt an entire economy if you just buy everything they need. And so I imagine if the rules and regs around what you can and can't pull out is now being challenged by a foreign entity that you may or may not be in an official war with. And I would say we are in a trade war. We're in some sort of proxy war. And so there's definitely competing battles, and Shanghai is growing. And so I would look at it, to me, there's other markets, yes, but I say the biggest markets in the world right now, it's Europe, it's the United States, and it's China. And it feels like to me, I don't see, there's going to be pressure on everyone. I think Europe's going to be the loser out of the 3. It will be my take. So, but Comex is under pressure as well.
Europe, meaning the LBMA. When you say Europe is going to be the loser, what do you mean by that?
Yeah, I mean, I don't need to name names, and I've got friends over there that we do business with. But yeah, I think just look at their issues that they've had with their gold deliveries a year ago. And a lot of people, I mean, just look at when Germany says, hey, we want our gold back. And how long does it take for a government to get their own gold? And now, I mean, a lot's sitting in the Bank of England, and a lot of people are saying, hey, I want it in my jurisdiction. So I would say the way we're in a new paradigm. This is no longer a trade. This is a whole new shift where banks want to own more on their balance sheets, whether that's a private bank, you're watching them get in, central banks are buying, institutions are buying. I just had a publicly traded company, and we're doing account paperwork right now, and they're adding silver onto their treasury management, and it's a large amount. I've never seen anything like this. So you're watching in live, people were talking. I feel like Michael Saylor did gold and silver a favor. He talked about putting Bitcoin on your balance sheets as a treasury asset. Now, while he said sell gold, and he also said, hey, take out debt and mortgage your home to buy Bitcoin, I think it woke people up to say, you know what, I can hold inventory of Let's say you're a furniture company or clothing or food, but I can also have euro, yen, the dollar, the Mexican peso. You can have anything. Well, why can't you have an asset? And so, we had Tesla, Elon, the SEC bylaws were amended to hold Bitcoin and gold bullion at the same time. Bitcoin got all the love, and they did hold a little Bitcoin for a little bit. And I don't believe they bought any gold, but they put the plumbing in to do this. So I think we're watching people while the U.S. dollar really has no gold backing anymore since Richard Nixon cut the tie. I think you're watching people and other people saying, what, should we start having some sort of exposure to this asset class?
So to clarify, you are seeing publicly listed companies adding physical silver to
Yep.
their balance sheet as a treasury asset. This
You're
is
hearing
what
it
you're
live.
currently.
And you'll see, and I can reference later, I'm sure there'll be an SEC filing. Yeah, there's companies doing it. And this is someone in the digital, that's in the digital realm. I mean, just even pay attention, even look at what's happening to the tethers of the world. That's a US dollar backed stable coin that decided out of nowhere, hey, we probably need a little bit of gold too, don't we? So watch what people are doing. Yeah, a lot of gold. And now they're 20 billion, I believe. So just watch what people are doing.
Is there an SEC change that is required to allow for companies to hold physical silver and gold as a treasury asset?
Probably depends on the bylaws of your company. So, everyone's got their own policy. I mean, in theory, any company could buy and sell something, but when something's outside the realm of what they're doing business with. So, most of the time they have their prospectus expose their risk disclosures, what they're involved with, those types of things. And so if you're entering a new arena, you typically have to disclose. So, you can't, if you're in, let's say you make computers and you suddenly want to get into real estate, you're going to need to make some disclosures that, hey, we're going to start buying homes. And so I think this is a trend that I think the can is opening, and the world is going to change, and we no longer can trust the same institutions in the same way. And I would say, and I feel very blessed to be in the state of Wyoming, where the state even decided to buy its own first physical gold. And we were selected over JP Morgan to hold the state's gold. But I think it kind of shows, and this is out of a $33 billion fund. So what if they start to figure out, hey, what kind of percentages of the central bank's going to? So the guys that have nothing are going to 1 to 3%. Then the people that are at the nations that are at 1 to 3% might be going 5 to 6. Poland's going to 37% in gold. So now I was just with Joe Cavitoni at the World Gold Council at the International Precious Metals Institute on a panel. I was on stage with Joe, and the whole topic, we were talking about how states are entering the arena, and some of these states have more money than countries in Europe. What happens when they start buying gold? And I can tell you, they're there. I was just in Austin 2 weeks ago. State of Texas is now going to start issuing their own gold and silver coins. These are historic times. Things are changing so fast. And this is not the same story you heard 10 years ago or 20 years ago. This is we're entering a whole new paradigm.
So states in the United States are buying gold. We know central banks around the world have been buying gold at record levels. You're telling me that publicly listed companies are now coming to you and saying, we want to buy physical gold and physical silver. And you also mentioned that banks are vaulting with you without betraying the confidence of your clients. What can you share there?
Well, I can share one of them because we had a press release that just came out yesterday that was approved by the bank. So Wells Fargo just announced that Wyoming Reserve is another vault option for their institutional customers. So I think we're also watching. Yeah, we're watching decentralization away from New York and London, and people, their customers don't want to vault in those jurisdictions anymore. They'd rather be somewhere that has maybe more transparent auditing. Maybe it's not subject to, I would say, the nonsense of the big cities that we're watching unfold. And And so they're essentially decentralizing, and there's insurance risk out there. So a lot of these vaults, and I don't need to throw any shade on some of these other well-known vaults, but some of these have 5 to 10% aggregate limits left. That means if you put $100 million into a vault in New York, you're going to get a certificate of insurance that says you have $100 million, but you're not asking the question saying, what's your aggregate limit that I'm sharing? And so look at the gold's at 5,200-ish, right, in price. And look at the amount of gold that's coming into these vaults. The largest single facility at Lloyd's of London is right around between 5 and 6 billion. So some of these vaults that might have 50 to 100 plus billion, I'll let you figure that out. So yeah, there's absolutely concerns. There's a lack of vaults out there, and so things are definitely moving.
So obviously, when you talk about this demand for hard assets, and you touched on allocation and as a percentage, and how there's so much more room to increase that allocation of gold, what does that signal to you in terms of price movement? I mean, obviously higher, but what does that signal to you, both in terms of price movement, and also, well, I'll let you answer that first, and then we'll get into the biggest signal.
I would say, when we think about investing in things, there's trends, and then there's markets that are very saturated. But I would say when the wind is at your back, and then especially when you have customers like governments who can print money out of thin air and they want to buy what you own, that's an easy thing to say, I should probably have some allocation there. Whereas, if we're like, hey, let's get into these other things, but you don't have that kind of buyer behind you, and so there's something called the halo investing strategy. And this is really big. It's just starting. It stands for hard assets, low obsolescence. So meaning people don't want to buy things that could go bankrupt. Start adding, let's get away from precious metals for a moment. Just think of the changes that technology and AI is going to bring. How many companies are going to be around in 5 to 10 years? This is something that people are now starting to think through. So if you think about it, if things, and inflation's quite the topic that's not going to go away. So if you own hard assets not attached to credit, those are nice places to be in. Precious metals is the ultimate investment right now. And so I can say that in pretty good confidence. I don't know where it's going to be exactly in 3 weeks or 3 days or 3 months out, but I feel pretty comfortable multi-years out. It's up and to the right. And because of who is entering the arena to buy. And it's not stopping.
Halo, hard assets, low obsolescence. Is that correct?
Obsolescence. Yeah, low obsolescence.
Meaning precious metals, real estate would fall under that category.
Totally. That's right. Because it's still going to be around. It's not going away. And I think
you raise a good point. We have no idea what the world looks like in 2 years' time with AI. We have no idea what the world looks like in 5 years' time in terms of the changes that we can see with AI. But from a metals market perspective, where do you see metals in 5 years' time? Do you see metals integrated into a global monetary system, something that you've discussed before when you talk about companies and states and central banks buying gold? And I know you've discussed gold as a sovereign asset. Do you see that structural change happening where gold is integrated more officially into the monetary system? And does that happen within 5 years, 10 years?
You would have, obviously, no one has the crystal ball. And it would seem like to me, we know the current financial system's cooked. And, I would say a lot of the large organizations out there have talked about a great reset. I think we could look at it and say at least a monetary reset is probably coming. And it seemed like there's different factions to see who's going to control that reset. And then, how people are treated along the way could very differ. You could kind of just look at there's so many factions that I don't need to get into that I'm sure the viewers can figure this out. So if you kind of look at it and you just figure out, well, what are these various groups going after and doing? I don't know what other system you would be looking at. I know people have talked about Bitcoin, but really that's digital gold. This is the real thing. And it's been around for thousands of years. And so I would say, again, we're not going to be at grocery stores, handing out gold coins to buy our stuff. But is it going to have some strategic underpinning, strategic asset, some sort of connection to keep our politicians and our money more sound and more honest? And I would say it almost has to be. I mean, we're in rampant fraud here in the United States. We're watching fraud at the state level, the federal level, and nothing seems to change. So where's this trust going to come from? So it totally feels like something is coming. It's coming rapidly, and they're not obviously going to announce this for everyone. And so I'm just watching what the battles are over, and you're watching, literally Latin America, the Western Hemisphere is of strategic importance to the United States, and whether that's Greenland, Venezuela, Mexico's now in the news. So you're watching the pieces of the puzzle all kind of come together. And I think for those that are able to see where we're headed, this is kind of fun to watch. And frankly, the stuff you see on TV is less shocking.
Fun to watch, but also kind of scary at the same time. Let's bring it back to the metal wars and your thesis there. And you touched on Mexico, and that is in the news right now. And there have been unsubstantiated, in fact, inaccurate rumors that China's President Xi said that President Trump plans to use the recent cartel violence as a pretext to invade Mexico and take control of silver. Just for background for our viewers who have not been following, Mexico is facing a surge in cartel violence after security forces killed a big drug cartel leader known as El Mencho, the longtime leader of the CJNG gang, the Jalisco New Generation cartel, I believe. And rather than calming the situation, his death has in fact triggered retaliatory attacks, roadblocks, arson, clashes, more violence, more chaos, and that instability is spilling into key economic sectors, transportation, raising concerns about security, investment risks, supply chain disruption, and mining, because Mexico is also the world's largest producer of silver. Silver, of course, has also been recently added to the critical minerals list. So Mexico produces about a quarter of the world's silver supply. And as we know, silver is critical for electronics, energy systems, semiconductors, defense technology, AI. So there has been some rumor that President Xi that said that President Trump plans to use this cartel violence as a pretext to invade Mexico, take control of silver somehow. Now, this is not accurate, to be clear, not accurate. No word from Xi on this officially, no word from the Trump administration on this at all. But it's interesting because it highlights the point that's being discussed and the framework that people are viewing the world through, including you. So what is your read on this dynamic in Mexico and how it ties in to your bigger thesis of metals wars and what we can potentially extrapolate from that?
Well, yeah, if you're not trading with each other kindly and friendly, then you have to have very strategic partners. And if your partners are cozying up to the other group, and I think we could say that, look at even the pressure that you're seeing in Canada. Carney is doing a lot with China and it really frustrates Trump. And so you're seeing some, lots of discussion there. Mexico has done the same thing. I mean, frankly, where's all the fentanyl coming from? It came from China. China's taught them how to make the fentanyl that's coming in. So you could say that some of these cartels, maybe some might be used or popular with the U.S. government. Some might be the enemy. And so who knows? It's chaos. We've all seen the movies and the theories that could unfold. But it would seem like, for me, the United States absolutely is locking down the entire Western Hemisphere, top to bottom. So that means strategic partnerships. That means this is the trade alliance. So military backing is this is where it is. China has basically mopped up, I'd say, the majority of Africa over the last 2 decades. The U.S. did a very poor job under past administrations of paying attention to a strategic everything. All the manufacturing went out to China. China went and locked up natural resources pretty much over most of Africa. So Africa's kind of, let's say, somewhat lost to some degree from a resource perspective for the United States, but the United States is focused on Latin America, I would say. So not shocking to me to watch, what happened with Venezuela. And clearly that material, a lot of times people say, oh, that's terrible. Again, I'm not picking sides. I'm Team America. That's where I live. That doesn't mean I agree with everything that happens. But that metal was going to China and Russia. Now it's going to the friendlies with the United States. So we talked earlier about the battle for above ground metal. Now we're talking about battle for metal below ground, which means feedstock as that material comes out. So a lot of that ore that comes out of the ground is pretty much in 2 forms. Concentrate, which typically goes to Asia. There's been no smelters built in the United States in more than 50 years. And Michelle, I don't know if you caught the news, right around about 2 months ago, the Department of War put in $2 billion to help fund the first smelter they're putting in Tennessee. And while it's a primary zinc smelter, it produces an awful lot of silver and other strategic rare earth minerals. And then that's also financed by JP Morgan. Then in that deal, it's with a Korean entity. In that deal was that if we do this deal, that you have to give us more of your metal today. So Korea metal now is moving more to the United States than it was in previous months. So now you're battling for metal below ground. The second form, whether it's concentrate, it's doré. So it needs to go to refineries. So the banks control the refineries because they control and finance all that. I mean, this is mega dollars. So all that metal flows in to a refinery of choice. That refinery typically doesn't own the metal. Usually it's owned by the bank. And then the bank decides where it goes afterwards. So if a bank who is their end customer? We go back into the mercantile banking. So this is how a nation state can acquire an awful lot of natural resources without anyone really watching or understanding what's happening. So it's very strategic to watch it unfold. And it's kind of it's not fun to always watch it, but just to understand, what really is happening.
Mm-hmm. Right. And again, I would like to emphasize that that all happened at the same time that silver was added to the critical minerals list, which means it's deemed as essential and necessary for the economy to continue to operate and for national security. And we've long discussed the industrial use of silver, from everything to semiconductors to defense technologies. I want to focus on what's happening with Mexico and how that may impact silver prices in the near term, if there is an impact in the near term. As I mentioned, Mexico produces more silver than any other country, roughly a quarter of global mined output. That puts it ahead of China and Peru by a significant margin. Do you think that this violence would impact silver mining? Would it impact supply chains coming out of Mexico? Does that then lead to some kind of disruption of supply and therefore a price increase? Is that too far down the line? How do you see the chaos in Mexico potentially impacting silver prices in the near term?
Yeah. So I used to do 20 years ago, I did corporate risk management when I was in my 20s, and I did it for mining companies. A lot of them were in Latin America. So I remember working on gold mines in the Sierra Madres of Mexico. And to give you an idea how bad some of these cartels are, if you took an armed truck and you drove it down the mountains, it's not going to make it out. It's going to get hit. It's going to get knocked. So we would have to work and consult with these mines to build airstrips to fly the gold out, and then land at undisclosed sites just south of the Arizona border, and to drive it up into the U.S. for refining. So this was 2 decades ago. It's only gotten worse. So we don't know. I would say that the conflict that's kind of happening, in one area, is this, like, how rampant is this going to go? Obviously, precious metals, all mining is big dollar money. Whether that's the government of Mexico, and I'm sure there's plenty of narco groups involved in some of this. So, could this impact it? I would say absolutely. Yeah, absolutely could. So I think we're going to have to kind of take a wait and see approach as to how this will evolve. I think this is just pretty new. It's new. Obviously, this is built around one issue with one cartel member. But when the Trump administration, I don't think they were joking around when they said that we will be sending in special forces. So I think, why are we sending in special forces into another company's affairs if it wasn't strategic? And so I think that's something we could see in the near future.
Well, they have designated the cartels as a terrorist group. So I guess that would qualify sending in special forces. Do you think that's going to happen?
I'm going to go with yes. Yeah, I would say I think it's probably likely. There's a lot of times people even look at, like, why are the mining companies underperforming just the hard assets? And I would say, people don't realize how much of a geopolitical risk is really out there. And so you can have a mining company in any jurisdiction, including the United States, which happened under Biden. And then when the economy of a state or a nation is struggling, it's hard to watch someone who's just making untold profits. And then they say, hey, we'll nationalize you. In other countries, and under the Biden administration, he wanted to increase taxes on hard rock mining significantly. So I would say that's a pressure on mining. And that's also why a lot of these nations were underdeveloped over the last few decades. Because, hey, I'm going into a jurisdiction where the rules of law can change on like that. They may not even, they may not exist. So I think we've seen an underdevelopment in some of these nations, and because we have to go to harder places to go get these resources. So I think the geopolitical risk is very real. And if we just, I think we can all admit there's some major economic problems all over the world. Imagine all the AI changes of jobs. Everything's pretty much focused, in more modern countries, but imagine the impact all throughout the world. I mean, right now, it's like inflation is impacting, third world countries in ways that we can't even really fully imagine. So this is a very trying time. And this is where World War III type scenarios could absolutely be formed.
World War III type scenarios?
Yeah. I mean, just historical. Why do people go to war? Money and pressure. Why did the U.S. finally enter world? It gets pressured in economically. And when people aren't trading friendly, it's just, to me, it's almost a matter of time. And when things get a little more kinetic, and here we are. Well, I don't know if you're watching. I'm sure you guys are watching the movement of ships in the Middle East. I would say Iran is. I mean, Turkey just admitted they're going into Iran and creating buffer zones for when there is strife and turmoil and a power void, so that refugees aren't flooding their country. I mean, what are they preparing for?
Right.
So, and who represents Iran? Who's on the other side of Iran? It's China. It's Russia. So I think we're just watching, and I'm hoping I'm in the camp of hope for the best but prepare for the worst.
Right, and that's where gold comes in, as we know, the ultimate safety haven, the ultimate geopolitical hedge. And yeah, to your point, we do have ships headed towards Iran. I was at an event yesterday, and the discussion amongst some of the geopolitical risk analysts was that they expect some kind of action come April, first or second week of April, that's potentially where we would see some kind of decisive action in Iran. And look, we didn't really think Trump was going to do something in Venezuela. I mean, that sort of took us by surprise, even though, if you're paying attention, it was laid out in that national security document that they put out in November, which really did consolidate the idea of the Monroe Doctrine, or the Donroe Doctrine, and that is securing the Western Hemisphere in your immediate perimeter, as we're seeing the fraction of the global stage, the bifurcation there. I want to bring it back to Scottsdale Mint as we start to wrap up here. Again, it's one of the largest private mints in the US. You produce bullion, you mint legal tender coins for sovereign nations. Which sovereigns are you minting for that you can share with? And are you seeing any interesting signals from that?
Yeah, I think, we do a lot of the smaller governments. So a lot of like the British Commonwealth, the Caribbean, some of the like Samoa, Fiji. There are bigger countries that we do work with that I can't share. But I would say if we just kind of look at the theme of deindustrialization of Europe, um, they're looking to have their products made elsewhere. So it's very difficult to hire, to fire, power, just making anything in some of these countries are just it's just not what they want to do anymore. So companies like myself can assist really any country or company that needs to consider a gold coin, a gold bar, whatever it may be, whether it's legal tender or not. So roughly about 20-ish that we work with.
From an operational standpoint inside Scottsdale Mint, what feels different to you right now compared to, say, a year ago?
The fever pitch of the movement, the numbers, the I can think of clients of mine that we've worked with for more than a decade that might place small orders. Their orders are now 10x the size every week. And so I would say for us, I kind of have talked with a number of departments for a company like ours, and this is where it gets really difficult. It's not just a 20, 30, 50% gain. I would say on average, if we look at like how much extra load on everything, it's about a 20x increase in everything demand, whether that's transportation, emails, phone call, everything is just insane. And so that's really kind of our whole industry wide, whether you're in Asia, you're in New Zealand, you're in Australia. You probably have seen some of the, Perth Mint. You go to their websites in Australia. They have big disclaimers. The disclaimers are so we're not alone in this, but I think I'd say the dynamicness of this, we've not seen this level. Really, it's not at the COVID craziness of we were dealing with even much different times during those lockdowns. But I'd say this is definitely the most, and it's almost like, Michelle, this is all a new class of people coming into metals. This isn't the same group. A lot of people sold. The moment silver hit 40, 50 last year, they kind of sold out and left. Now there's new people coming in. There's a new story kind of coming in, and so that's what we're seeing.
I know you're not a financial advisor, Josh, but people look at this market and they say to me, oh, it's too late. I've missed the moment to get in. Do you have a price outlook for gold? And we'll start off with gold. Because as we said, gold is flirting with 5,200 now, and people are like, well, I missed it. Do you think that, are you ready to call a bottom in gold in this current run?
Probably not. Then you can't call a bottom, because let's just say there could be a world event that happens that, while it should be bullish for gold, it could be so bearish for the stock market that there's liquidity issues, and then gold has to sell off. We saw that during COVID. Gold and silver sold off, and then it went right back up. So I always kind of add that there's a little asterisk there. But I'll kind of say the same thing I've said over the last couple of years. We've seen metal prices rise since then. You kind of look at the historical rate on gold. I would say my conservative target was 10,000. That sounded crazy 2 years ago. Now that sounds, I'm close to what the banks are now predicting. But I'll say the exact same thing. One of the guys that really kind of helped me get into the industry was a guy named Jim Sinclair. And he was a really well-known trader in the 70s. He passed away a few years ago. He would always go off of a ratio that I'm kind of, in his honor, kind of re-bringing that ratio back up. So I call it the Phair-Sinclair ratio. So you can ask Grok or ChatGPT what that ratio is today. But it's essentially a ratio during times of financial crisis. You take this reserve currency of the world, and you take its foreign debt, so it's the United States, it's foreign debt, and it's stated gold holdings. Now, we can ask questions if it's all in Fort Knox or not, but let's just go with stated for now. And at what price does gold need to be to balance? And so in the 70s, that price was 900. And so it hit 887.50. It came within $12.50 in 1980. Jim Sinclair came back on the scene again during 9/11 and said the governments are starting to print again. Here we go. Gold's going to 1,650. And that's when gold was in the 200s. So that was an 8x. And so part of me, and I'd say, why I really appreciate Jim, because I remember these things. This is why I moved my company. And this is why I invested during the lockdowns when no one was traveling. I said they're going to do it all over again. And that ratio today, Michelle, is at 35,000. And so that is a difficult price to say or predict. And I don't know, I could be wrong. But so I'm in my mid 40s, it could hit if I'm going with it, it's going to hit a third time in my lifetime, that ratio. And so so I wouldn't say that we're late stages at all. As we just talked about all the geopolitical problems.
Right, you threw out $10,000 gold. We had Jim Rickards on the show saying he could see $10,000 gold by the end of this year. What is your timeline for that?
Yeah, I was on stage on another panel with a lot of really well-known bank analysts. I pulled a number of 7,200 for gold for this year. Again, I'm pulling that out of a hat. But it does feel like if you kind of take that number, I'd say my time frame is 2030, 2032. And so I'm kind of, so there we are in that kind of 4 to 6, 7-ish years, give or take. And again, things change. And that ratio is based on the current debt. So what is the United States going to do going forward?
Well, I mean, you could say that we should not be looking at the debt, but rather the debt to GDP ratio. And if the economy continues to grow and strengthen, that changes that conversation. But that's a conversation and a discussion for a whole other time, as well as whether the gold's in Fort Knox. I know you have some thoughts on that. We'll have to bring you back for that one. But we're running out of time here. So 7,200 potentially by 2026. Not necessarily going to hold you to it, because I know I've put you on the spot with that one. That's for gold. And by the way, yeah. And JP Morgan came out today and said that they see 6,300. And again, JP Morgan is conservative and keeps on revising its estimate higher and higher and higher. We had UBS saying 6,200 by the middle of this year. So again, it's not such a big jump from 6,200 to 7,200 in 6 months' time. Thoughts on silver as we wrap up here? In terms of price.
Up and to the right. Silver will be more volatile, both up and down. There's a lot of things that are changing dynamically. You're going to see some solar companies that make solar panels move away from silver. So that's going to take away some silver demand at some point. But is that variance enough?
In lieu of what? In lieu of another material?
Copper. Yeah, they'll move to a copper technology for their panels. It might not be as efficient, but they go off of an efficiency per dollar metric when they make these panels. So there's new technology. So I think there is, but while we are running a deficit, I still believe we're going to continue to run deficits. So there's other bank analysts that think, but I'm going to go with that these metals are so needed for AI, they're needed for military needs. That, what a Tomahawk missile has roughly 500-ish ounces in every missile. So if you're sending more off, you're going to need a lot more metal. I think it just goes poof at the end. So I do believe that, silver is consumed, whereas gold is just stacked for the most part. So silver to me feels like a really good, you really have to be a little more careful in the dollar cost averaging these days right now, just because it's extremely volatile. But I think both asset class should have an amazing number of years.
And as you mentioned, companies are adding silver as a treasury asset, so that in itself would see it going higher on the monetary side of things. But we're going to hit triple-digit silver again, I'm assuming. Before 2026 is out, for sure, if we're touching 91, even though we've had CME outages?
I would rather take the odds that it's going to than not. Yes.
Okay. You're a good sport, Josh. I put you on the spot a few times. You're a good sport. Thank you very much.
Hey,
Where can
sometimes I'm right, sometimes I'm wrong. So we'll roll with it.
but you're coming from a very well-informed position, and that's why we wanted you on the show today to get your perspective, considering where you are in the industry. Where can people learn more about you and about your work, Josh?
Yeah, you can follow me on my X account. It's Josh Phillip with one L, Phair with a P, PH. So follow me on X. I'm usually trying to just kind of bring insight in terms of what I'm seeing and what's out there, and just have fun while I'm doing it.
Okay, well, it's been fun chatting with you today. Thank you so much. Really appreciate your time.
Great. Thanks, Michelle.
Thank you. And as always, thank you for watching. If you enjoy our content, find it informative, entertaining, which we hope you do, please share it. Also, please subscribe. And keep in mind, we have a weekly newsletter that you don't want to miss. It has previews and specials and unique macro insights that we don't always share on the show. There's a link in the description. It's also on our website, milesfranklin.com. As always, leave us your comments. Feel free to praise, whine, or just opine. We love hearing from you, and we often get some really good question and topic ideas from that feedback, so please keep that up. For me, Michelle Makori, and the rest of the team, thank you so much for watching. We'll see you soon. Till then, stay sovereign.
This is The Real Story with Michelle Makori.